The Central Bank of Nigeria today intervened in the investors and exporters window for the first time since January this year. Dumebi Udegbunam, fixed income trader at UBA, sheds more light on this as we await the outcome of today's Treasury bills auction. Dumebi, thank you for joining us today. Help us, give us more details on this intervention at the importers and exporters window by the CBN.
Good afternoon, Esther. Thanks for having me. So, for the first time in almost 3 months, the CBN intervenes in the FX INE window, pumping a bit of money in the system to more or less ease out the FX crisis in the market. So we saw a stable maintenance in FX rates in the market. The last time the CBN intervened in the market was in December with about 5.3 billion. Before that, Q1 2020, we saw 13 trillion. So we've seen a drop from 13 trillion in Q1 2020 to a drop in 5.3 billion in Q4 2020. And now the first time since that has happened, we are seeing an intervention right now. So we hope this will continue going forward, as we've seen an increase in the foreign reserves to about 220 million has been increased, owing to a 26% increase in oil prices to about $63 per barrel. So we expect to see more of these interventions going forward into the year, especially in Q2.
Okay, now 2 questions. In what way has this impacted the Naira range, where the Naira is trading? Second question, is there still, because for a while, all through 2020, and I think the first part of this year, we talked about this backlog of demand that the CBN was struggling to clear. How much of that still remains?
Okay, so the effect of this is that we have seen a stable exchange rate. It hasn't gone higher than where we are right now. So the exchange rate has been stable. Going forward, we expect to see more of this. And the backlog of the FX crisis we have still a bit of backlogs. If you notice, global trade imports has reduced from the figures released by Q4, has reduced about 45%. Global trade also has dropped by like 9 billion annually. So we expect, with the further increase in crude oil prices, we expect to see a better FX market going forward. But with this intervention, we've seen a stable Naira this week, and to close this week, we might also still see this stable exchange rate.
All right, let's leave FX for now. Let's go to the PMA auction today. I know the traders were, correct me if I'm wrong, offloading some of their long-dated bonds in anticipation of higher rates today at the PMA. How do we have results out, or what are your expectations in terms of subscription rates and what the rates could actually be? Okay,
so the results are not out right now, but from the Q2 calendar released, the total amount of borrowings by the DMO this quarter is at 570 billion. Already 2 weeks before that, 144 billion has been raised in the previous PMA auctions, where we saw a 2%, 3.5%, and a 8% at the previous auction on the short, mid, and long dated bills. So we expect to see higher rates in this next auction, probably 8.5 or 9 to close at the longer end tenors. However, what is maturing is only 70 billion. So we expect to see either an increase or an exact rollover of that amount. So traders in the markets and market participants are emphasizing higher rates and higher yields going into this auction.
All right, we have just about 1 minute left. What is your forecast for the rest of the week, especially fixed income? When we do have these results, how do you see it changing market dynamics going forward?
Okay, so basically the fixed income market is probably stressed with illiquidity. In total, we only have about 1.1 trillion maturing the whole of Q2 compared to what we had maturing in March. March we had only 1.3 trillion, but in Q2 total we have 1.3 trillion maturing. So we expect the systems to still be stressed with illiquidity. However, we emphasize higher yields going forward Q2 and into this week.